Bismillahirrahmanirrahim. My name is Hassan and welcome back everyone. Today I'm going to give you guys a stock analysis video on a company hardly anyone else is talking about. It is called Devon Energy Corporation, ticker symbol DVN. It is in the oil and gas industry. As you guys know, currently oil and gas prices are out of the roof. As you guys know, I'm from New York State or New York City, and currently around New York City or New York State, the average gas price is around $5.01, or in other words, it's around $5, which is historically really high or one of the highest in all time. Since we are paying so much in gas prices, might as well own these companies that are in the oil and gas industry. So I'm not a person who only talk about investing. I actually do it. So I'm going to show you guys my Robinhood portfolio. So currently my portfolio is at $33,000. At one point it was at $51,000. But I'm not upset because we are in a bear market. This gives us an opportunity to buy at a lower price. I'm not a person who shows you guys my portfolio when it's up. I also show you guys my portfolio when it's down. We're going to scroll down a little bit and you can see that I recently started a position in Devon Energy. Currently it's around $57 and I have about almost one share. And the reason why I bought this one share with average cost of $64 is because currently I'm watching it and I'm hoping that it continues to go down so I can get a sizable position into this company. I would say that anything under $55 is a good entry point and you guys can slowly dollar cost average in. There are a lot of YouTubers out there who are making these stock analysis video when they don't even own any shares. I have about almost one share and I'm looking forward to adding more shares into my portfolio. I actually put my money where my mouth is. So that way you can hold me accountable and I can hold myself accountable. And I'm looking to have at least 5% of my portfolio into Devon Energy. As always, before we get started, don't forget to check out the disclaimer in the description below that I'm not a financial advisor, nor do I know you personally or your financial situation. And nor am I here to certify if any companies are halal or haram. So make sure you guys check out the disclaimer in the description below. So we're going to take you guys to Seeking Alpha. That's how I do my analysis. So we can see currently Seeking Alpha is around $58 per share. Devon Energy is an independent energy company that focuses on exploration, development, and production of oil, natural gas, and natural gas liquids in the United States. It has approximately 5,134 gross wells. Devon Energy Corporation is located in Oklahoma City, Oklahoma. So now I'm going to take you guys back to stock analysis website. This is a great website to analyze the companies, does in-depth analysis with all your data points. Just to keep in mind, one of the first things I like to look at when I'm analyzing or determining if a company is worth buying or not is their market cap. Market cap tells me if I were to buy this company all at once as a whole, how much would I have to pay for it? And this company is worth around $38 billion. Current PE ratio of 10, which is okay. Historically, it has been around this price. And they pay a dividend of $3.60, which is almost 6.20% or around 6%. So now I'm going to take you guys back to chart. If we look at it for 1 month, it is a nice decline here, or at least if we look at it for the 1 year, we can see that at one point it was around $77, $78. Currently it has a nice pullback around $58, which is why I'm making this video, because it gives us a opportunity to get into this solid company. And this also shows a nice big dip. We always talk about buying the dip, even though for the year it's up around 30% or 31%. So now I'm going to take you guys back to their website, May 2nd, 2022, their earning presentation. We scroll down to their 2022. So what I want to show you guys is that Devon Corporation is positioned in 2022. Almost everyone is talking about cash flow, as cash flow being one of the most important things in a company. So here they're showing us our WTI crude oil. So we can see that at 90%, they're making around 14% in free cash flow yield, which is great. At $100, they're making 16%. At $110, they're making a massive 18% free cash flow yield. Even if the WTI crude oil is at $90, they're still making a decent amount of money. So we're going to check out the current crude oil prices, going to a different website. This shows us the crude oil price. If we look at it for 1 year, we can see that at one point the crude oil was at $120, $119. Right now, crude oil is at 109, 110. So at this price, at 109, 110, they're making around 18%. Say that the crude oil price drops, and we expect it to drop because this high price of $110 a barrel is not sustainable in the long run. It will shut down the whole economy. So even if they bring it down massively to even $90 per barrel, the company still makes money. Even if they go to, say, $80, which is right here, instead of them making 12%, they will make around 10%. And then even if we go down to 70%, they're making around 8% in free cash flow. I would say that this company will do well as long as crude oil price is staying around $70, $80, $90, or even $60. After below $60, it gets a little bit tricky. The reason why I'm doing this analysis company is because they meet the business model that I like. The safe, easy, sleep well at night business model, which we're going to show you guys in a bit. So let's just look at some price targets from Analyst. Here again, we're back on stock analysis. So guys, if you guys made it this far, make sure you guys like and subscribe into the video. It helps me grow and the channel grow. Remember, as I say this all the time, in the investing world, we're all on the same team. They have their analyst rating, which is a buy. I really don't pay much attention to this because this is super inaccurate. The analysts are always getting things wrong left and right, but it's just a fun to look at. So here they have a projection of $65, average $80, and then at high $105. If it reaches $80, I would actually trim down some of my position because I would say that that's relatively high for me. At this price is 58, 55, I'm a buyer, and if it reaches around $80, I would start trimming down some of my positions. Now we're going to take you guys back to Seeking Alpha. We can see their revenue growth. They're making $6.3 billion. 2021, they're making about $13 billion. And now in 2022, or the last 12 months, they're making almost $15 billion. We can see a nice significant amount of growth over the years. Their revenue is increasing, which is good. And we're going to check their gross profit. Same thing, we can say that in 2017 they were making around 2.1 billion, and now in 2022 they're making around gross profit of $8.6 billion. So their revenue is increasing, their gross profit is increasing. There's one more important thing that as an investor we have to look at is their interest payment. As a Muslim, we have to make sure that their interest is little to none, or actually we would prefer it to be zero. So we can see their interest payment is in the last trailing 12 months is 375 million. Quickly go to my notes. In order to be a company, for it to be a Sharia compliance, it has to meet these quick 4 checklists I like to go through. Remember that I'm not a scholar in Islamic finance. This is just my personal opinions. Please reach out to a person of knowledge in this matter. For the Sharia compliance, or at least the Sharia quick checklist, the business has to be halal. For the most part, we know that it's a oil exploration company. Is mostly, we don't see anything wrong with it. The company is halal. Next thing we want to do is we want to check at their interest expense. It cannot exceed more than 5% of their gross profit. In reality, we wanted the interest expense to be 0. But here we're just going to go with anything less than 5%. Their debt has to be less than 33%. Their interest bearing items has to also be less than. What I like to focus on is the interest is less than 5%. It most of the time fits these other 2-3 criteria. So again, we're going to pull out our calculator. So the interest expense has to be less than 5% of their gross income. So we can see 375 here. So we're going to pull out our calculator. So we're going to do 375 million divided by 8.6 billion. So 8695. We get around 0.04. We're going to multiply by 100 to give us around. So their interest expense from their gross profit is around 4.3%. So it is under the 5%, which is okay. We normally want this to be as low as possible, or maybe like 1, 2, or even 0 point something percent. So 4.3, it is on the higher end, but it still does meet one of the Sharia compliance criteria. So we're hoping that they continue to keep their debt low. So guys, if you guys made it this far, make sure you guys like and subscribe to the channel. The reason why I'm picking Devon Exploration, because they have a low debt, or their interest expense is a lot lower than the industry average. If you guys take a look at my portfolio, I don't have any energy company, and that's why I'm looking to add at least one to have it somewhat diversified. So now I'm going to take you guys back to their slides. Some of the takeaways from their last presentation is that they do have a fixed plus variable dividend, and which they increased it by 27%. Currently, they are paying a dividend of $1.27 per quarter, which is an increase of 27%. I do want to point out it is variable. The reason why it's variable because it changes with the oil prices. That is really a key important information to keep in mind when investing into this company, because they have a variable dividend where it can increase and decrease based on this oil prices. They did have a 27% increase. I'm going to take you to Seeking Alpha, where they have their dividend scoreboard. We can see in this website they're saying around 8%. Payout ratio is 54%, which is good. I like companies that are paying a significant amount, or at least half of their dividend payments, to their shareholders, and they're keeping around the other half for the growth of the company. And they are paying at a quarterly frequency. So every 3 months you will get paid from this company. Now I just want to go through it why I like this company so much, because I don't have I don't have an energy company, and I'm looking to add one. They do have a buyback program extended to $2 billion. They're looking to repurchase 3% of their outstanding share, which is nice. They have in the Delaware Basin, they have high margin production, growth increase of 27% year over year. So here they're showing what buyback program, right? So here we can see their total shareholder return. Total shareholder return is how much a company is returning to shareholders through dividends and share buybacks combined. We can see that here, over the last 1 year, they're paying back to their shareholders around 6.2%. Investing in this company will benefit from the dividend payments and through share buybacks. So now we're going to scroll down. We want to talk about their business model. Out of all these companies, why am I picking Devon Corporation? Is because of their business model. They want to maintain a low leverage. As a Muslim, this is very important because we cannot deal or associate with ourselves with interest. They want to prioritize free cash flow, having a fixed plus variable dividend, and have a growing margins, operational scale, and cost efficiency. So main thing is that they want to maintain a low leverage and have high priority in free cash flow. As we showed earlier on, while they can make it 18, 15, 12, even 10% in their free cash flow yield. As always, guys, if you guys made it this far, thank you. Hit the like button, hit the subscribe button. We'll see you guys next time. I am looking to add more into my Devon Corporation's holding. As always, thank you. Bye, everyone. See you guys next time.